This content is for educational and entertainment purposes only. It does not constitute investment advice. I was on a Discord call with over 500 traders. It was Tuesday, and Bitcoin had just hit a new all-time high the day before. And on this call, all anyone could talk about was the reversal. And you know what kind of reversal I'm talking about, the big one. People were calling for a 20 to 30% downside move confidently. Take a look at these candles here. They all have one thing in common: massive lower wicks. And that tells us something really important. You see, at one point, each of these candles looked like a full-bodied red bar, where sellers were in full control. But here's the crazy part. Massive lower wicks like this tell us that sellers actually lost control, because near the lows, buyers stepped in hard. They absorbed the sell pressure and pushed price back up. A signal that sellers tried to break price lower, but failed. And that's exactly what these wicks are. They're evidence. Evidence that lower prices were rejected and that buyers were quietly winning the fight down here. And every single time sellers made a push for lower lows, trying to extend the downtrend, price never made it far. Each attempt was quickly stuffed, rejected, and price just couldn't stay below this wick zone. And eventually, it reversed. Not just a bounce, but a full-blown reversal. And when you really look back at it, the very first signs of this shift were these three wicks. This was the tell, the clue that something was changing. And it all circles back to this exact price sequence. And at the time those three wicks appeared, I actually said something in the call to all 500 people listening. I pointed it out. We've got three massive lower wicks here, and this might be the bottom. But it felt like no one heard me except for one guy who asked me, why would three lower wicks signal a bottom? And the truth is, I didn't really have a solid answer. Yeah, price ended up reversing hard. It never meaningfully broke below those three wicks again. So in practice, my observation was right. But in theory, I had nothing to stand on. No logic, no data, no real framework to explain why wicks like this mattered. Just a gut feeling, but that's what it hit me. I needed to prove it, not just to myself, but to every trader who dismissed those wicks as noise. I needed a way to track them, to test them, to build something that could finally answer that question. Why would three wicks matter? But the truth is, scanning the entire chart for clusters of large wicks just isn't realistic. You can't scroll through hundreds of candles hoping to spot this kind of pattern by eye, not with any consistency. Before I could build a real theory around this gut feeling, I needed help. I needed a tool that could actually detect these large consecutive wicks for me, objectively and automatically. And thankfully, my developer already had something in the works. So I started using it, not to trade off it, not yet, but to study the levels it was identifying, to see if there really was a pattern, to see if those kinds of wicks consistently pointed to something deeper. And that's where things started to click. You see this line right here? This is what the indicator picked up. And what it's doing is actually pretty simple. It's standing for large, high percentile wicks. This just means the indicator is finding wicks that stand out based on their size compared to everything else around them. And when it finds a cluster of them, it takes the average price between those wicks and anchors a level at that specific spot. Now, you're probably wondering, okay, but what exactly does this do? And I could answer that question in 2 words: hidden zones. This technique surfaces hidden support and resistance levels that most traders would completely overlook, because these levels aren't drawn from closes or a traditional market pivots. They're drawn from where price repeatedly failed to break down. But I didn't just take it at face value. I started watching how price reacted to these levels after they formed, especially the ones the indicator marked early on. And over again, I'd see price come back, tap the level, and react, sometimes sharply, sometimes subtly, but with a kind of precision you don't get from hand-drawn support or resistance. And that's when I knew I was onto something. So let me walk you through the exact playbook that I started building. And it all starts right here, where this level forms. The indicator picked up a cluster of large lower wicks and anchored this line based on the average price between them. Now at this point, I'm not trading yet. This is just the setup phase, and I'm watching to see if this level actually means something, if price respects it later on. Then we get this. The retest. Price sells off and comes back down into the level, and look how clean the reaction is. Price taps the line and quickly rejects it and forms another big wick right on top of the zone. And that's what I call confirmation. This kind of rejection tells me that the level is legit and the market is remembering it, and that's when I start paying attention for real. Then later we come back into this level again, and that's when I start thinking about taking a position, because now I've got context, structure, and proof that this level has held. So if price shows me strength here, a strong close off the level, a wick rejection, or momentum shifting, that's when I strike. An extremely simple framework. Let the level form, wait for confirmation, and then look for structure around the retest. It's not a signal, it's a lens. And I'll be honest, this simple framework, it's become a really powerful part of how I approach the market. It's not perfect, nothing is. But over time, I've noticed when I follow this logic, when I give these wicks the respect they deserve, I stay more patient, I chase less, and think more clearly. It's helped me to avoid forcing trades in the middle of nowhere and instead focus on areas where the market has already shown its hand. And that's where Multi-Wicks IQ comes in. Quick heads up, Multi-Wicks IQ is a trading view indicator that it's unlocked when you register with our partner exchange. It's an affiliate product, and we only earn a small commission if you trade at no extra cost to you, and trading is not necessary to unlock the indicator. This is the tool I've been using to track these levels automatically, to surface the zones that I used to miss, and give me a real-time lens into where price might pause, react, or even reverse where I wouldn't normally see it. So if you've ever felt like you were getting wicked out, missing key levels, or trading in the middle of nowhere, this framework might be worth exploring. Start watching how price behaves around these large wick zones. Just observe. You'll be surprised how often the market leaves clues. You just need the right lens to see them. And if you want to start tracking those levels automatically, Multi-Wicks IQ is available through the link below. Just make sure to read the full details before signing up. Again, trading is not required to unlock the tool, and this is not financial advice. It's just something that's personally helped me. If this video sparks some ideas, drop a comment and let me know how you've seen wicks behave in your own trading. And if you found this video helpful, consider liking the video and subscribing with notifications on for more strategy breakdowns, indicator walkthroughs, and raw trading logic without the hype. You can also follow us on TradingView and Twitter for unique updates you won't find here on YouTube. Thanks for watching, and I'll see you in the next one.